Panel number 5, digital assets, investing in venture capital, blockchain, and crypto markets. Can I please get a show of hands if you are directly invested in some sort of digital asset, even if it's 0.001% in Bitcoin? Nice and high for me, nice and high for me. Fantastic, excellent. Can we please give a round of applause to our panelists that have just joined us on stage to talk about this topic, panel 5. My name is Andres Ospina. Thank you again for everybody for being here. Thank you to our team, to our AV team for doing a great job. Jimmy, John in the room helping run mics and get our speakers, so really appreciate it. But once again, it's a very interesting topic. I've been with the company for 7 years, and it's been very interesting to see the changing attitudes over time on this asset class, digital assets, blockchain, crypto markets. Obviously, AI is a big topic of conversation right now. Last year, during the crypto bear market, and there was a lot of talks of NFTs, you know, the talk kind of simmered down, but when all of these altcoins and exchanges started doing 800, 1,000% returns, everybody on stage started talking about it. So it was very interesting to see at our single family office summit 4 years ago, us talk to family offices about it and them say that it's absolutely stupid, it's a fad, and then another year them saying, of course, I'm willing to risk 5% to make 500%, and then for it to, the attitude to once again change again, and there to be a lot of interesting skepticism and also interesting optimism around this asset class. So important to keep in mind that I have 7 panelists up here, and I have 33 minutes and counting. So this is gonna be a flash panel. Guys, I make people clap, I make people stand up, I call people out if they're talking in the middle of my panel. So the same thing goes for our panelists here today. We have 33 minutes divided by 7. You're each getting about 3 to 4 minutes of talk time. If you go over, I will politely, or maybe not so politely, ask you to allow the next person to speak, but it's a fire hose of information. That's kind of our style, because that one little piece of information, that one little 30-second soundbite can make a big difference on whichever project you're working on and give you a good idea on what our investors here today are truly interested in. So we'll go down the line. If you can please just introduce yourself, where you're flying in from, and a little bit about your specific area of focus. So we'll start out with James.
Hi there, my name is James Bates. I run a family office out of Phoenix. Mainly, I am a tech guy. So all of my wealth came from tech companies that I have founded and exited. And I'm looking for industries that will fundamentally be revolutionized by technology. So I'll start with artificial intelligence. I'm the CEO of a company named Abby Medical, which uses artificial intelligence to completely automate the medical visits. And when you look at that, you look at the actual impact it has on medical practices, the EBITDA goes from 3% to over 30%. So as I'm looking for businesses to invest in, this is what I'm looking for. I also, not only the healthcare industry, but I'm general partner in an AI trading hedge fund. And this is another area where artificial intelligence completely revolutionizes the industry. You start looking at actually returns, which are approaching 100% per year for the past 3 years. Why do these two industries have such a significant impact? Well, both the medical industry and the trading financial industry require tremendous amounts of data to be brought in, analyzed, crunched to be able to make the best decisions. So as my own family office I'm looking to invest in, I'm looking for similar opportunities where this type of change, fundamental change in the industry, this disruption, will occur. When I start looking at other types of technologies, blockchain really does come to mind. Anytime you are storing data, transmitting data, doing a transaction, that has an opportunity to be revolutionized. The crash of the cryptocurrency market has taken blockchain, so it's not the fervor of discussion all the way down to kind of a slow rumble, if you will. But ultimately, there is 100 different markets out there where people transact among each other, and there's a third party doing the transaction. Blockchain has the capability to eliminate that third party and enable person to person to do trusted transactions. So definitely an area I'm interested in, and I'd be very welcome to talk with you if you have any of these disruptive technologies in the market. Thanks.
Fantastic. Thank you. Jonte.
Good afternoon. My name is Jonte Harrell. I'm in from Miami.
All right.
And by day, I'm the CFO of ZenLedger. We simplify crypto taxes with software. Mark Cuban is an early investor. Last year, we raised $30 million for a Series B. And we're proud to say we have years of runway, so we will be around. Our customers are retail individuals who effectively show up to the platform and plug into whatever wallet, exchange, et cetera, token, and instantly within minutes you'll have your tax liability, or if you look for tax loss harvesting, you get outputs there in various forms. In terms of governments and institutions, we've had a contract with the IRS since 2020, where effectively we finish their investigations using our software. So if someone were to be audited, unfortunately, our software would say, this is where you stand. And so before you get in that room, best use it. By night, I invest my own capital under the moniker ASEAN Capital. To date, I've invested in 70 different startups. I started in 2010, my first investment, knocking on wood, I was just lucky. I invested in my classmate. He started Betterment, and today, 30 billion under management, profitable company. So it's a proper unicorn by the sense of valuations these days. Today, I continue investing in crypto, in Bitcoin, because I think, as was said, that the technology, regardless of the headline news, is still there. One example that I think for this room is pertinent, central bank digital currencies. China has stepped out and taken the lead there, but they've done so for different reasons to monitor their population. The US, as well as other Western countries, are looking into this as well and are likely to debut something. Effectively, the speed at which you transact, as well as the tracking of those transactions, will exponentially increase. And I think that's one takeaway that the audience should know. I could also talk about tokenization, which if you just follow JP Morgan, they say that will impact trillions of market cap. And so those two factors alone are what I'm looking at in this market, tokenization and really the future of money and finance, which is blockchain, despite the kind of headline news of crypto.
Excellent. Thank you so much. Francis.
I'm Francis Santora. I'm an angel investor. I live in northern New Jersey. I invest in early stage startups, typically SaaS and consumer marketplaces. I generally invest at seed stage. These companies are a year or two old. Maybe they have $200,000 to $500,000 a year in revenue. What I look for is big markets, awesome products, and great founders. And then I want to see traction, early traction. I want to see their revenue growing fast. My advice investing in startups, focus on the market. Focus like a laser on the market. You could be the most incredible founder, tenacious, hardworking, never gives up. Normally those are awesome traits, but when you're in the wrong market, they're the worst traits you could possibly have because you're going to beat your head against the wall for years. I've got a couple companies like this, and I'm probably going to lose my money on those ones. You have to be in the right market. What's the right market? Generally a very large one, like say, for example, the market for housing or the market for taxi cabs like Uber. You can't be in a niche market, like say, for example, niche software, like software for dentists. There's only so many dentists in America. You can only charge them a couple thousand a month. You certainly can't charge them $50,000 or $100,000 a month. They can't pay it. So multiply all the dentists times what you can charge them. I did this once. It's like $140 million a year for every dentist in America. You're never going to get every dentist in America, so you have to focus on something bigger. Now, if you're starting with dentists and next you're moving to cardiologists and then neurologists, Okay, that works. You can start in a small area so long as you have a credible path to expansion. Another market to avoid is what's called D2C, or the subscription boxes everybody gets, whatnot. Physical items, really hard to scale, horrible margins, incredibly competitive. The advertising costs will eat you alive as a startup. It's incredibly difficult. So if you can do pure software addressing a really big market, the biggest problems in the world, you have a chance at success. Otherwise, things don't look so great. So that's what I would suggest.
Fantastic. Thank you, Francis. Neil.
Neil Wolfson. I ran a family office for a decade. Before that, ran a $40 billion asset management firm. So I've been doing board work and on 3 public company boards and number of private company boards and a large family office in New York and from New York. So I had to cross the river to get here. So it's a little tough, but leaving Manhattan is a big deal for a New Yorker. But anyway, so the thing that I find most interesting. So first of all, I'm chairman of the board of a crypto firm. But besides that, I identified with someone else a strategy for blockchain gaming. And we deployed it. We started a fund. We deployed the strategy in a limited sense. We got a 4x return in 1 year, distributed it out. And now we're doing the same strategy, but diversifying it. So we're out with another fund, probably it's going to be double-digit multiples on this thing. The strategy's limited, though. I can only do 6 million, and a lot of that's already been spoken for. But anyway, that is what I'm doing now. But the blockchain gaming, just look at the growth in that area. 3 billion people are playing blockchain games now. 3 billion with a B. Almost 40% of the world's population is playing it. All the rage in certain parts of the world. Everybody plays, and you play to win. You actually buy to participate in the game, and then you can win. And we have a strategy for actually creating the game or financing.
You mean like play to earn? Play to earn?
What?
Play to earn?
That's exactly it. Play to earn is what it's known as. And so it's a incredible craze. People are playing it just of all age groups.
3 billion's a bold statement.
Not my figure. Actually came from another firm, a venture capital firm that's big in this space. And it's actually above 3 billion is the figure. I figured I haircut it a little bit and give something that's a little lower, but still 3 billion people are playing it. And if you think about the population of countries in Asia, you can get to that number. And it's everybody playing it. It's widely followed. And so that's what we're playing off of, the growth of that sector and the financing of games. So it's probably, I've been doing this for 30 something years, probably the best risk reward I've ever seen with these types of multiples that we're able to get on it. But again, limited capacity.
Excellent. Thank you, Neil. Just something to keep in mind, I'm going to introduce our next 2 panelists, but start mulling over some questions. I want to know what you guys have in mind to either question for our panelists, something in regards to your specific space that you would like to address to our panelists. If you want to start just kind of mulling those over, anybody at home, happy to take some questions from those of us that are watching virtually. But Jim, you'll go next, please.
Thank you. My name is Jim Jalil. I'm a senior advisor of the Howard Cooper Family Office, specialized in crypto. I'm retired from a large law firm where I was founder and chairman of the crypto practice group. I'm an adjunct professor at Fordham Law School where I teach a course in DeFi, crypto, and smart contracts, which are all part of the crypto world. When you look about crypto, you have to really bifurcate 2 sectors. One is the technology itself, blockchain, which is scalable in innumerable, if not inestimable numbers of functions. Gaming for one, DeFi, digital finance, fintech, healthcare. And this technology to use the word of the day, disruptive. This technologies will overtake the world in the next 5 to 10 years. Everything will be on the blockchain eventually. Just like if you lived in 1975, you would say everything will be on a computer eventually. That's going to happen. It's going to happen. Blockchain is the technology of data storage for the future. And the second prong of the industry is crypto itself. NFTs, Bitcoin, ETH, Ripple. These are assets that live on the blockchain. They're asset stores of value. In terms of what investors should be looking at in both areas, we want to invest in crypto, NFTs. If you know what NFTs are, I'll happy to talk about that, with the crypto itself, blockchain, ETH, or invest in technology. There should be startups or companies that are becoming involved in the blockchain, use of blockchain technology and the development of blockchain technology in all areas of industry. That's another investment opportunity, is in blockchain technology, or I should say companies which utilize the blockchain technology, or funds which invest in that technology. And that's what the Cooper Family Office is looking at.
Fantastic, thank you. Clinton.
Hey, how's it going, everybody? My name is Clinton Buey. I am the co-founder of Abatement Group. We have a hedge fund which specializes in discretionary long strategy for artificial intelligence, blockchain, deep tech. Previous life, I actually was an engineer at Google. So I was an engineer for a few years. And went to Stanford, been in tech for over a decade, been in blockchain since 2013. Funny story, I actually bought blockchain on Bitcoin because it was looking like it was going to be a major competitor to this finance startup that I was working at. And the finance startup isn't here anymore, but blockchain, Bitcoin is still here. Probably, I made more money out of Bitcoin that I invested in than the actual startup I actually worked at. So yeah, that's an interesting story. So what I want people to take away today is, I'm going to try to answer one question that's going on in the audience right now, and that's risk. Like risk and what's happening in blockchain right now. And when you think about investing, this actually reminds me of one of my professors. He said something very profound. I went to him for office hours, and I said, hey, what should I know for the final exam? He was like, at the minimum, you should know everything. And I was like, well, that is really, I guess I got to know everything. But in blockchain, you kind of really need to be in this space. You really need to be in the weeds, especially technically. And I'll explain why, right? This space is evolving so fast that some of the companies that were billion-dollar companies that happened overnight are going to be irrelevant in the next year. There are technologies that are coming out right now, like for instance, Eigenlayer. Eigenlayer is probably one of the most exciting things that I've seen come out in the blockchain space. If you don't know what I'm talking about, just kind of let it sink in a little bit. But it's actually taking several concepts from companies that have had massive gains and rolling it up into a layer on top of the Ethereum network and making it free. So if you're going to invest in this space and you know that this is coming out, there's certain companies you would just avoid. And the reason why I take a discretionary long strategy is because being really deep in the tech and knowing what's happening in the space. Look, I've been in the space for a long time. I've been at Google, I've been working in blockchain for over a decade. And because it evolves so fast, you just better know what you're doing. You just gotta know what's happening, otherwise you're just gonna be left behind. And so with that said, I wanna quickly just conclude and say, yeah, with the risks, look out for geopolitical, what's happening in regulatory, look out what's happening, which countries are gonna settle on having the best regulatory laws. And if you don't understand the tech, please educate yourself or talk to someone who is deeply involved in it, because I had a lively discussion with an audience member and they were right. People are just throwing their money at whatever. But if you know what you're doing, you can avoid a lot of potential pain and get significant upside by several orders of magnitude.
Fantastic, thank you. Do we have any questions from the audience? Anybody who wants to raise their hand? All right, the gentleman over here, can we pass him a mic? Charlie is coming your way right now.
Thanks, Charlie.
I hope it's controversial and edgy and
Sorry. No.
fiery.
First of all, thank you very much for the information. I really appreciate it. I'm in the real estate space, and I've heard a lot about a tokenization of apartment buildings. People have explained it to me. I guess the question for you guys is, have you ever done it? It seems like the so-called unicorn. Have you ever done it? If you have, what were some of the key points to it? You know, dollar figure, things like that. What I was told is buy the building, renovate it, or whatever I'm going to do with it, basically buy it and then sell it through tokenization. And then I guess I stay on as the management company. Thank you.
All right, so actually I know several companies that are doing this right now, and the issues that they're running into are regulatory, like, because if you actually sell the asset, the tokenizable asset, it's then a security. And so what you're talking about is you're tokenizing the gains and the profits after the fact, and then selling that and having that completely decoupled from the asset in regards to that. I've seen companies do this. I haven't actually personally built a blockchain that actually does this, or a company like, but it is very hot. And it will take over the real estate market. And it's going to be very exciting when we're going to see people getting in and out of real estate in North Carolina. Let's say you want to buy something in North Carolina, and then in like a few minutes you can get out of your position and be in Arizona. Like we're the next, or if Google or Amazon moves to Arizona or something like that. So I think it's very exciting, and I have seen companies do this. And if you want, I can point you in the direction after. Absolutely.
Great. To maybe give a very brief, added explanation. I guess I love demystifying some of the finance jargon because I just find it funny. I used to be in the military, and so it's like all these acronyms and things. So tokenization, think digitization of paperwork that if you've bought a home or even you've rented a property, you know that you have to fill out all this paperwork. So moving the industry and the world forward, tokenization means digitizing those documents and then tracking those digitized documents on the blockchain. And so there are a number of companies, Milo Credit in Miami has done this. And so effectively you're cutting out middlemen and basically streamlining a process that right now is stuck in 19 whatever because it's like a stack of papers. So
I'd like to add to that too, as well. It's a very good point. Everyone knows what a deed is. You sell a house or something, you give a deed, a piece of paper. That's been the way you transferred real estate since 1750. You gave a deed. To this day, you give a deed. It's a piece of paper in the lawyer's office. Digitalization is you don't give a deed. You transfer a token. The token is the deed. And that, you transfer real estate, transfer anything. If you tokenize it, you've taken that piece of paper and you made it into a digital asset which exists on a blockchain. That's all it is.
Fantastic. I think we have another question. Can't see the light. Oh, okay, I'm sorry. I'll walk that to you right next. Sorry about that.
Digitization of the deed. I own a little teeny house, literally 500 square feet in Greene County, New York. The local town, whatever office is where that deed lives. Until you replace all 10,000 of those offices around the country, you can't tokenize my house.
No,
Answer that comment, if you would, please.
That's very true. But we were talking about creating a deed today, which we could transfer. But go back to 1975. There was a tremendous resistance to putting deed records on a computer, right? Why would you do such a thing? What if you unplug it? Where is it? Where's the deed? And they have these big books in the county seat. Today, many counties no longer have the big books anymore. It's on a computer.
Yeah, I want to add something to this because I actually thought about this, about starting a company with this, because quite frankly, the way there's so much inefficiency in real estate and how you transfer assets, it's unbelievable. Now, the problem with starting a company, a blockchain company right now, is that because there's that fragmentation of like 10,000 different individual agencies, and some of them are still in paper. Like you have to pull up a deed and somebody has to scan and fax it to you. That's like ridiculous. The reason why this is a problem is because this is more of a government. Like I feel like the government needs to get in and actually digitize a lot of this stuff. But once it's on the blockchain, oh my God, like you can go worldwide. Like you can just immediately transfer deeds. You immediately know like the title transfer of who actually bought and sold things. It'll just be instantaneously, you just know. But the real problem is not so much the technology is there, it's been there. The real problem is adoption by our government and being able to have it so that we can do it just immediately. So I love that idea. I literally thought about starting a company, but I didn't because I feel like the government should do it.
And very quickly, to your point of the multiplication of properties, there's also a concept called fractionalization. And so as you digitize those documents, it allows you to sell a fraction. So instead of replicating the stack of paper, again, you just digitally sell a piece. And so that's also a benefit of the blockchain.
Fantastic, great. Thank you. I have a question right here in the middle. Your name, please, for us. Your name?
Hi, I'm Christine Ashmore. I thought the greatest struggle or issue with tokenization was no secondary market and no liquidity. Once you're in, how do you get out?
I beg your pardon, in what regard?
And tokenization of real estate is everybody, so you sell on the open market to a bunch of people who want to tokenize it, and then I'm in it a year and I want to get out. There's nowhere to sell it to. There's nowhere for me to sell my tokens to.
Well, so to answer this question a little direct, there's actually places like OpenSea, like if you have NFTs, or there's decentralized exchanges like Uniswap. They have their pluses and minuses if you want to actually sell like this in those places, but there are places that have liquidity pools where you be able to like swap those tokens with different people within that space. And that's the beauty of blockchain, right? Like a lot of the stuff that you would have to have a centralized authority, you can just literally go into like a blockchain that has two buyers and sellers, and it has an automated moneymaker like swap mechanism, which will be able to take care of it. So I think the technology is there to do what you just said. Whether or not it has KYC, know your customer, anti-money laundering, that's the question that I really want to ask. Like,
So the one thing I think would be relevant is to separate the two different things. You're talking about a marketplace and being able to access the marketplace for the actual tokenized asset, whatever that may be.
And the liquidity.
And the liquidity of that marketplace, rather than the technology itself. The technology itself is there, it's been there for a while, and it's evolving at a very rapid rate, and I think it's wonderful. The marketplaces themselves were evolving tremendously until the last couple of years where, cryptocurrency had its wonderful collapse and now coming back. But I think the great thing about the technology that's being developed is you can go in and tokenize your asset of whatever that is, and you can still bring it back to paper if you wanted to. So I don't think that the marketplace is the end all for whatever asset you buy. And it would be to your benefit to go through the process and participate in one of those markets, because you could very well get a higher profit through those marketplaces than you would otherwise.
Do we have another question? I want to have a follow-up question there, though, because I've come across a couple attempts and companies that attempt to build this tokenized marketplace. And I would say that, the issue is going to be the liquidity pool, right? Because you need to have that liquidity pool in order to allow people to sell their asset immediately. And because my question was, why is it taking so long to tokenize, right? I think we've been in this space now for quite some time. Tokenization of real estate almost seems like a simple concept to a certain degree with blockchain already existing. But I would say that having that liquidity pool is probably the biggest hurdle. Unless someone would disagree, and I'd be open to hearing it. Francis, if you want to stay, I know you've...
I guess I would think to myself, I'm not really involved with tokenization, but Fundrise already takes buildings, splits them into little bits that you can invest in. In fact, I do. Do we need tokenization? That's what I would think about.
Yeah, so crowdfunding has been around for a while, which is what they do. And there are dozens of firms that do that. Pool assets together, buy a building. Sure. Or provide debt for a building. It can be equity or it can be mortgages on the building. And that exists. You hit at what the key issue is. And they don't talk about that. Going in, it looks great. Going out, it's hard. Try to sell a minority interest in anything. And as a family, we had minority interests in buildings. And Try to sell a piece of a building, very hard to do. Selling the entire building is hard enough. Selling a piece, a minority interest in it where you don't control it, really hard to do. And that's one of the issues with everything in the private markets. When you have to stay in for a certain period of time. So don't make the investment, whether that's a venture capital fund, a private equity fund, whether that's a building that you own a minority piece in, have a time frame that you're going to be in and have the time horizon where you can stay there and you can afford to stay there, because getting out, the illiquidity, try selling a venture capital fund, a piece of a venture capital fund, not easy to do. There are markets, they typically give you a huge haircut, and if there's even a buyer on the other end. And then you still have to get the GP to agree to it. I mean, it's a difficult task. So don't go in assuming you can get liquidity. Go in assuming you can't get liquidity. And you're going to have to, if it's a 10-year fund, I'm going to be in there for 10 years.
So I would just like to add, I agree with everything with what the gentleman said.
Yeah, thank you.
But ultimately, I want to separate out tokenization and fractionalization, because those are completely two different things. I think if you were to take a title and tokenize it, the liquidity capability of that marketplace is somewhat irrelevant, because you can still sell it to someone that doesn't want the token by just converting it back to paper. Now, if you fractionalize it, that's a completely different conversation. And the dream is to be able to fractionalize tokens easier, because you don't have the stacks of paperwork, as was mentioned earlier. But they are different. So as you're moving forward, just kind of keep that in mind. And I would love to see the marketplace of actual tokenization really take off, and all those 1,000 city offices around the country actually modernize.
Fantastic. Thank you. We have another question.
Hey, Ray Khan. Thank you for all your insights.
I'm sorry, your name?
Ray Khan.
Ray Khan. Thank you, Ray. Where are you coming from, Ray?
From Greenwich, Connecticut.
All right, that's my hometown.
Yeah. So thank you for all your excellent insights. Digitization and tokens is complex. It deals with a digital ecosystem that is fragmented, lots of intermediaries. What is your view of using the internet and having tokens transacted over the internet with invisible technology underneath? That seems to be the way that will lead to mainstream adoption of digital assets and tokenization. Thanks.
I'll say this on the breaches of what everybody else says, but yes, I mean, the ultimate goal of blockchain is peer-to-peer transactions. And that's the ultimate, is to remove the middleman. The whole concept, the whole theory behind blockchain is really anybody to access it, to buy and sell on a blockchain without having to go to a stock exchange, without having to go to a marketplace. And I think ultimately, yes, ultimately the net result, the end result of blockchain technology will be peer-to-peer transactions happening instantaneously on the internet. That's exactly the goal.
So can that be done now?
Sure.
I saw a company yesterday that I met with that does exactly that for overseas people primarily. You can get around a lot of the capital controls thus, and so maybe you're sending money from Canada to Guatemala. I mean, this is a way you can do it. The rails are USDC. However, that is not apparent to the user. It's just simply a way to accomplish something.
Yeah, there are companies doing that. The issue is the regulatory environment. The regulators can't figure out who should regulate it, how they should regulate it, what the rules should be. And then their response is, well, we'll turn around and litigate against you based on rules that we've never established and never told you what to do. So it's caused a lot of people to get skittish in this market. And there's some lawsuits that have been going on for years in that space. So it's very hard. It's actually easier to operate in many other countries than it is in the US because there are countries that have established the rules and the guardrails, and people know what to do. And actually the players in the marketplace want there to be regulation because they want to know what they can and can't do. And right now it's really opaque. In the US, it's different in some other countries.
What other countries?
Yeah, I couldn't agree more. I would tell you that the regulators in the US are behind the curve.
Well, what other countries are much more advanced in regulation?
Countries you wouldn't believe, like Europe. has regulations. So, I mean, when we have to follow Europe and take a lead from their regulatory regime, it's an issue. But parts of Europe are much better established. Parts of Asia are much better established.
Singapore.
Yeah.
Singapore has a great regulatory regime around digital assets, and it has made a name for themselves and has companies moving there. And I think it may be a goal on the part of the regulators to actually discourage it, viewing it as a competition to the Federal Reserve and the dollar and things of that nature. So they're forcing them. Maybe they just don't understand it. Maybe they fear it. I don't know what it is, but here there are a lot more. There's a lot more difficulty transacting than there is in some other parts of the world.
So specifically
Fantastic.
in the EU, there's a proposal which is set to go into effect next year called MiCA, M-I-C-A, and it would effectively passport crypto registration of a company. And so let's say
MICA.
exactly, you register in Germany, that allows you to effectively do business in Italy. And so public companies such as Coinbase are now reevaluating their headquarters in the US, their at least main headquarters in the US, because they've had issues, whereas other regimes such as Singapore, as was mentioned, are a bit more favorable. And so this is a major item for us to watch.
Excellent. Fantastic. Well, thank you so much. Can we please give a big round of applause to our panelists?